All right, let's get straight into it. We're breaking down everything you need to know about IRS Form 1099-K. So first things first, what exactly is this form and why does it exist? Okay, think of Form 1099-K as a report card. It's not a bill, it's simply an information return that gets sent to both you and the IRS, showing the total amount of money you received for goods or services through certain electronic payment systems. So where does this form actually come from? Well, there are two main sources. First, from payment card processors. That means if you accept credit or debit cards. The second, and this is the big one for most people, is from third-party networks. We're talking about payment apps like PayPal or Venmo and online marketplaces like Etsy or eBay. Now, just because you use these services doesn't automatically mean you'll get a form. There are very specific rules or thresholds that trigger a 1099-K being sent out. For tax year 2025, when we're talking about those third-party networks, the apps and marketplaces, the first part of the rule is that your gross payments have to be more than $20,000. And the second part of that rule is that you have to have more than 200 separate transactions within the year. And this is absolutely crucial. For apps like PayPal or sites like Etsy, it's not one or the other. You have to meet both of those conditions. That's over $20,000 and over 200 transactions before they're required to send you a 1099-K. But, and this is a huge but, if your business takes credit or debit cards directly, the rules are totally different. There is no minimum threshold. You get a 1099-K for those transactions, period. Okay, this brings us to what is, without a doubt, the most important part of this whole discussion, understanding what the number on that form actually means for your taxes. This is where almost everyone gets confused, so let's be incredibly clear. You see that big number on the form? Do you pay tax on that whole amount? The answer is almost always a hard no. Here's the key distinction. Your 1099-K shows your gross payments. That's the total, raw number before anything. Fees, refunds, expenses is taken out. What you are actually taxed on is your taxable profit, which is the amount left after you subtract all of your legitimate costs. So what kinds of things can you subtract? Well, a whole lot. You can subtract the platform fees, any refunds you gave to customers, what you paid for shipping, or any discounts. And of course, you subtract the original cost of the item you sold. Now, the rules for subtracting are a little different depending on why you're selling. If you run a business, you can deduct on your business expenses. And if you have a loss, it can sometimes offset other income. But if you're just selling a personal item, like your old laptop, at a loss, that loss is not deductible. You can't use it to lower your taxes. And let's get one more thing straight. If a friend sends you money on Venmo to pay you back for dinner, that is not a payment for goods and services. It's a personal reimbursement. It's not taxable income, and it has no business being on a 1099-K. Okay, so you've gotten the form, and you've done the math to figure out your actual profit. The next question is, where do you put this information on your tax return? Where you report it really depends on your situation. If you've got a side gig, you'll probably use Schedule C. If you're an S-Corp or a partnership, you'll use your business return. Sold a personal item for a profit? That goes on Form 8949 and Schedule D. And even if you sold a personal item at a loss, you still need to report it on Schedule 1 to show the IRS why the 1099-K amount doesn't match with taxable income. It's really easy to get all the different 1099 forms mixed up. So let's quickly clarify how a 1099-K is different from a couple of other common ones. So the 1099-K is for gross payments from card and network transactions. A 1099 NEC is what you get when a business pays you over $600 for your services as an independent contractor. And the 1099 MISC is kind of a catch-all for other things like rent or prize money. Each one reports a very different type of income. So what happens if you get this form and the number on it is just flat out wrong? Okay, first, don't panic. Go back to your own records to confirm the correct amount. Then, contact the company that sent the form and ask for a corrected version. But don't wait for it. File your taxes on time using the right numbers and just make sure you keep a paper trail of all your communications. And really, that's what this all comes down to. Understanding the form is step one, but having solid records is what gives you the power to prove the difference between that big, gross number on the form and your actual taxable profit. The real question is, are your records ready to do that job?